All right, morning everyone. Welcome to another episode of Market Trading. I'm your host, Tone Vays. Maybe the camera is zoomed in a little too much here. Zoom it out. All right. Let's go to the charts. Bitcoin is Bitcoin is pumping and it's looking great. We already have a few comments. Daniel Patel, thank you so much for your sterling donation. Hey, Tone, what's the name of the churrascaria, which should have the best meat in Sao Paulo? You know, that's a good question. I don't know the name, and the guy that took me there has no name. I have to look it up. We'll be there for a few weeks. Okay, I will. Man, I'll find out. I'll find out the name of that place. I'm usually really good. I usually like save places, but this time I totally forgot. Yep. Powell and Fed president having a roundtable discussion at the moment. Oh, that's interesting. Can't find a live link. Maybe there isn't one. All right, let's go to the charts. Let's go to the charts. All right, we have a new month. And let's see what happened this month. Well, let's see what happened last month anyway. So this is our long-term projection. And based on the long-term projection, we are perfectly in line with the purple path. We've established that purple path when we did not significantly rally back in May. And that's when I knew we were going to take the purple path to glory land. And I'm expecting the halving month to be a bit of a volatile month. I still think the halving will be late March, but we will see. I should probably take a glance at when the halving is projected. Bitcoin halving clock. Yeah, I like this link. This one. Let's see what's going on here. So it is projected to take place at the end of March. So once again, I expect us to have it at the end of March. The official date is April, but if more hash rate is coming online, then it would be at the end of March. So let's see. I think it will be very late March or very early April. Man, just 200 days to go. That's pretty cool. We have lots of let's see what happened this morning. This morning we have, you know what, I like this link better. ISM manufacturing numbers came in good. They came in higher than anticipated. That's a bullish sign for the markets. That's great. Not much going on tomorrow. I'm not sure the JOLTS job report is all that important. So lots of stuff's coming in on Wednesday, and the most important one is the payrolls, the unemployment rate. That's coming in on Friday. So let's see where that stands. Weekly chart, the weekly candle is a little bit off. They'll probably fix it tomorrow. We had a green star candle on the weekly, and we closed right at resistance at 28,000, double moving average resistance. I think this is significant resistance. Let's see if we can get above it. You guys know I was looking for 28,000 yesterday in Twitter Spaces. We discussed that I'm looking at 28,000 to be potential rejection. And if we can get above that, then I definitely expect 30,000 to be rejection. Markets do not just go straight up. You can see right here, back in June, we had an incredible week. We had a 15% bullish week, and it amounted to absolutely nothing and went back to the lows. So if we get back to the top of the range, I expect us to pull back. Only when the pullback doesn't go all the way back down will there be enough momentum to then break out and above the consolidated range. So we are limited on our upside here. I think we will pull back from here a little bit. However, we can certainly break this resistance and go higher, in which case 28,000 will probably be a good place to take a profit from some trades. You can also see the MRI a bit in line. We can easily get to an MRI top right at 30,000 over the next few weeks and run into an MRI top at 30,000 or say 31,000. We are not even halfway through the MRI trend. So let's see where all of this goes. On the oscillators, I mean, the MACD needs to cross over. It's not bullish yet. The RSI is looking pretty good. I like where the RSI is. And I really like where the, well, let me rephrase that. I think the CMF is reasonable. I don't think it's great. I would have loved to see us in this range, like over last week and this week. I would have liked to see us looking more like we did in January of this year than the way we look right now. The CMF is still negative. It has not yet gotten out. You want the CMF to be diverging. You want the CMF to show positive signs, even though the price has not yet rallied. You do not want the CMF to be lagging the price action. And this is a CMF that is lagging the price action. So if we look at the CMF here, I'm curious where the price was back in January. So starting with the second week of January, we went into positive territory. Now, if we look at the price on Bitcoin, this is February. So here is January, right? So right here on this little green candle, the candle of January 2nd, before the big rally in the price on the candle of January 9th. And now if we compare that with the CMF, you see right here on January 2nd, we were already at zero, and the price has not yet started to rally. And then in the beginning of that candle of January 9th, when the price started to rally, we were already in green territory. That's not what's happening right here, right? We're still clearly in the red, and the price has already rallied, not for one candle, but it's already rallying in its second candle, even though the second candle is not accurate. It should start at 28 and go up for a few $100. But even if this candle rallies like $400 or $500, it's very possible that the CMF is going to stay in the red. So the CMF is coming in late. You want the CMF to already be green or right at zero before the big price rally. So this is a little bit unfortunate, and didn't help us time matters at all. What about our allocation? Well, our allocation is looking very, very promising. We entered a 20% bullish position reluctantly, but the moving averages crossed. So I wanted to have some skin in the game. However, I think we've now rallied a little too far and a little too fast. So I would love to get a pullback before adding to this position. We also don't have any additional moving average crossovers. And even though two of the moving averages are rallying, we have not yet established a close above the long-term moving average. And the long-term moving average has been declining. And right now it's turning to the upside, but it needs to maintain it. The only way you would know that it's maintained is with another few more candles. So I will stay patient. I'm not going to rush into this candle. I think we have gone up a little too far, a little too fast. I think a pullback down to 27,000 is very, very likely. We reestablish some consistency here, and the more time passes, the more likely it is that this double bottom is here to stay. Also, if I extend this red line, which now doesn't matter as much, we are stuck right at resistance. This is not enough for me to declare that we have broken out. And the daily chart will really, really prove it. Let's go to that daily chart. So let's look at the oscillators first. We can see that the RSI is already telling us we have extended a little too far and a little too fast. This has been a very good indication, all year, basically. This is that big pump in January. So other than January, the RSI has called very good tops in March, in April, and in June. And now here we are, and a few more days of upside will get us into that range. Therefore, we need to be cautious that this rally may be running out of steam. Now, what about the MACD? Unlike the RSI, the MACD is looking very, very strong and very, very bullish. Now, what about the CMF? See, the CMF just finally got into bullish territory. It started yesterday, and it's continuing today. Now, let's look at the price action and the MRI, my favorite indicator. The MRI just gave us a green star candle on yesterday's candle. Yesterday was Sunday. I don't usually stream on Sundays. I take a break. And this green star would have shown up the moment we broke the prior candle's high. So the green star would have shown up early. However, nothing is easy in trading. It could have shown up, and then it could have disappeared, and the price would have crashed. And I would have been sitting here saying there was never a green star candle. I understand that, okay? The green star is the only thing on this indicator that actually shows up and could potentially disappear by the time the candle ends. Now, you need, as a trader, you need to learn how to manage that expectation. The way I manage that expectation is I look at additional factors. The biggest factor being how much time is left inside the candle, and potentially lower level timeframes, or even higher level timeframes, right? I look at other timeframes and I look at how much time is left in the current candle, which is almost the same as saying I look at time factor. And if I know that this candle has a high probability of closing with a green star, I enter the trade before the candle closes, okay? So if we're breaking above this prior candle's high very early in the day, like the night before, I'm not rushing in. But if we're sitting here and it's like noon or 1 o'clock in the afternoon, and the candle is going to close with 15% left in the candle, and we're sitting up here in the middle of the candle, I'm very, very confident that this green star will not go away, that we won't crash the rest of the day. And that's when I'm entering this trade. Now, we have double resistance. Very clear that we have broken. And you also see the long-term moving average, well, the shorter-term moving average, which is the 128-day, has crossed below the 200-day. But this is going to cross back over in a matter of days if we continue to rally. There is one more factor that I need to be confident that the moving average has broken, okay? And I will explain that in this video. These candles did not break this moving average. Yes, we had a close on September 19th that closed above the 50-period moving average, but the moving average was not broken, okay? Tone has his own definitions for shit, okay? As a trader, you need to come up with your own rules and your own definitions. The tone-based definition of breaking a moving average is a candle whose entire range of set candle is outside the line of the moving average. Therefore, this is the candle that breaks the moving average. You can see this entire blue range of the candle is above the moving average. This is the candle that breaks it, okay? And the following candle confirms it, all right? Now, we go back to what, and this just happened 3 days ago. So the candle of September 29th is the candle that breaks the moving average, not the candle that closes above it. Closing above it means jack, okay? Now, let's look at what happened September 18th. September 18th, we intra-candle went above the moving average, meaningless. September 19th, we closed above the moving average, barely, means very little. The following day, we traded half the day above the moving average and closed right at it or slightly below it. Not good. And the following candle, which also happened to be the MRI candle on September 21st, it all fell apart. This never broke the moving average. This is as textbook of a resistance as it gets. Let's go the time before. The time before, we had to deal with a long-term moving average. We had a monster rally on August 29th. This was a 6% daily upswing. Well, there's another word that follows, Jack. I just didn't want to say the S word. Though I say worse things than shit on this channel all the time. So we had a beautiful rally that closed significantly above the moving average, and it went even higher during that day. But once again, the entire candle did not spend all of its time above the moving average. So this meant absolutely nothing. The following candle went down, closed below it, and we pulled all the way back. These, according to the tone-based definition, I don't care what other traders have as their definitions of breaking a moving average. That is my definition of breaking the moving average. It has saved my ass on so many occasions, okay, that I trust it. We can go back even further. I mean, something like this is a moving average break. I mean, yes, this candle started above this moving average, but this candle was so bad, it actually broke an additional moving average. So obviously, I don't need to wait for this candle on August 18th to tell me what the hell is going on. There are very, very minor exceptions, considering how crazy this candle got. But if we go back even to right here on July 31st, you can see that a little part of this candle is still on the outside of the moving average. Therefore, I do not trust the candle of July 31st as a moving average break. And I was proven correct, because the following candle, we crashed even further and then rallied and closed above that candle. And the following day, we're rallying more, and it's a green star candle. So at the moment, I'm feeling smart that this moving average was actually support. But however, on August 3rd, that's when I come to the realization that this moving average was not support, and this moving average has been completely broken. The following candle is a red star candle, telling me I should probably consider bearish trades. We did rally, but we never broke above the moving average, and everything eventually fell apart. This is how I trade moving averages. Everyone is different. The current candle is breaking both moving averages, but as you can see, we are still touching both of them. Considering the fact that the MRI top is only about 4 days away, 28K was double resistance. We are a bit overextended. I am not rushing into any bullish trades. We also have the underside. Muted just in time. I just sneeze. What was I saying here? The weekly candle actually, sorry, that's the 4 day. The weekly candle actually looks strong that we can make it to 30. However, I think we've gone up a little too far too fast. There's additional resistance here where everything kind of broke apart, and that is 29,000. So if 28,000 is not resistance, 29,000 is resistance. And if 29,000 is not resistance, then 30,000 is resistance. And we also have the MRI resistance line at 29,700. This is a long-winded way of saying we have resistance at every single level at $500 increments. And this is not where I'm going to rush into any bullish trades. I would rather wait for a pullback. I would, in a perfect world, I want to see this get as high as it can, as close to 30,000 as possible, so that the $28,000 area could serve as beautiful support. And the longer time this takes, the more time we are giving to the, how do I draw like a squiggly line? Where is like a squiggly line? Is it here? Curve, path, no. Double curve, I guess maybe this? I have no idea. Yeah, here we go. The more time this takes, the more time you give for this purple, let me make it purple, for this 50-day purple moving average to scoop and go up. And then the price of Bitcoin could not only go up and then pull back, into the $28,000 area of the 128 and the 200. It could also, I mean, maybe if we're lucky, right? It's not going to go up that quickly, but you get the idea. So I would like for it to rally as much as it can to turn the 50-period moving average and then come back and backtest. And this becomes my good buying opportunity. All right, we got a message from Chris. Thank you so much for your donation. You said you believe that residential real estate market in the USA will drop, but also said in past you think USA will go into hyperinflation. Can both happen at the same time? No. Okay. Let me explain hyperinflation. And this is actually a good question. Let me go to YouTube. Let's back up here. That's a great question. It's a really good question. So, guys, please follow the Financial Summit on Twitter. You don't need to follow Tone Vays, but follow the Financial Summit. We tweet out a lot of this research, and also we do Twitter Spaces. Lots of good stuff gets posted. We got to make another one of these for today. The currencies should be topping today. The dollar should be topping this week. Lots of good stuff gets posted here. Now, tonevays.com. Let me not go there. Tonevays.com. Check out tonevays.com. Let me go here. On-demand videos. This is where I teach people how to trade, the MRI indicator, the works. You guys know the deal. The Financial Summit, just 1 month away. People are starting to sign up. We got a couple of signups yesterday, which was awesome. Everyone waits till the last minute. We have about 10 rooms left, maybe 11 or something, or 12. So I expect it to completely sell out. I will be in Dubai for 3 weeks, and I'll definitely be able to sell the final spots there. So you may want to grab your spot before I get to Dubai and start talking to people in person. Unconfiscatable, Las Vegas, December 7 and 8. Now, YouTube. This is the Financial Summit YouTube channel. Please subscribe to us there as well. I'm going to go to my channel. So you got to go to live. People are confused. You got to go to live. YouTube kind of messed this up. I don't do recorded videos. I only do lives. So one of these videos where I talked about the history of Rome, where is that? One of these long videos, like an hour and a half long. There it is. This video here. In this video, we talked about Russia, Ukraine a little bit, but we also talked about Rome. Right here. Talking about the history of Rome. Now, I put a bunch of useful links in the video description. These links happen to be in this video as well. Please read this, okay? Now, it explains how Rome fell. Rome fell didn't because they printed too much money or they debased their currency. Rome fell when confidence in the Roman political system has crashed. Okay? So this is why, no matter how much money the government printed in 2020, it was not going to cause hyperinflation. It caused some inflation, mostly because of the global shutdown and the destruction of the supply chain and the sanctions on Russia and the continued sanctions on China. And it was basically the stupidity of politicians that caused inflation, not the Treasury Department and the Fed printing money. Like, I will stand by that statement. It was not the money printing that caused inflation. It was the destruction of the supply chain that caused inflation. Not completely, but the majority, I would say 80% of the cause was the destruction of the supply chain. And 20% of the cause was the result of money printing. Now, what can cause hyperinflation? Well, just like in Rome, and I explain it by reading a part of this article. Maybe I'll play my own video because I'll let AI read it for me, actually. What caused the collapse of the Roman Empire, should I just play the video, is right here, is a Roman emperor was taken prisoner by the Persians. Maybe I'll play it. Hold on. Let me increase the quality here.
Captured Obama, turned it into his footstool, and the U.S. was powerless to invade. Then you would see the collapse of the dollar.
Let me turn on my volume.
This one area.
I've shown this chart on the collapse of the Roman monetary system many times. The collapse took place after the Emperor Valerian I was captured by the Persians. Can you imagine the blow to confidence if Putin captured Obama, turned it into his footstool, and the U.S. was powerless to invade? Then you would see the collapse of the dollar just as the Romans saw the collapse in their currency. It is always a confidence game. As far as central banks buying U.S. equities, no.
Okay, so this was written back in 2015 when Obama was still president. And it talked about how all of these crazy people, all of these gloom and doomers that have been saying that the dollar is going into hyperinflation, they've been saying it as far back as I remember. When I was studying back in like 2008, 2009, they were saying how the dollar is going to go into hyperinflation. That is insanity, okay? And this was written in 2015, and it explained dollar will go into hyperinflation when an American president and the American political system is so incompetent that a foreign enemy can capture an American president and nothing America can do to get him back, okay? And he gives an example. Imagine if Putin just captured Obama and there's nothing America can do to get him back. That would cause hyperinflation. Obviously, that wasn't going to happen. And that wasn't going to happen with Trump. And now we have a president that can accidentally get lost and end up in Russia just by accident because he doesn't know what country he's walking through, okay? Now, when he went to Ukraine, he could have accidentally, got lost, like your grandpa that, has Alzheimer's can get lost. I mean, they'll wander out of the house. And he could have accidentally wandered into Russia, like in The Walking Dead, you just like zombies, like walking around, could have accidentally wandered into Russia, and he could have been captured, and there's nothing America can do to get him back, right? That is the point where you would see complete hyperinflation of the US dollar, okay? It will be full loss of confidence in the United States military, in the United States political system. This is why Biden needs to be removed as soon as possible, because the world and Americans are seeing the collapse of the United States with a confidence game, okay? Now, until that happens, the United States dollar is likely to strengthen because look who we are measuring the US dollar against. We are measuring the US dollar against like the Canadian dollar that have just literally brought in a Nazi to clap for in the parliament, right? So it's hard to say who's more incompetent, Joe Biden that could just get lost wandering the streets, or Justin Trudeau, Castro's son, basically. So it's hard to say who is more incompetent, Biden or Trudeau. So when you measure the US dollar against unreasonably incompetent, shitty currencies like the euro and the pound, it's amazing that the UK has had a prime minister last more than a few months because that didn't really work out for their prior two. And so you have the most woke king in human history. So look where you're measuring the dollar against, right? Like when you measure the dollar against grossly incompetent other currencies, like the euro, like the pound, like the Japanese yen, which is now like an 800% debt to GDP, Canada, who was grossly incompetent. Obviously, the dollar is going to strengthen against this insanity. Now, if we look at currencies of the BRICS, like India, China, Russia, Brazil, people don't trust them yet. They still believe that the wandering zombie running the United States and Trudeau and who the hell runs Europe? Klaus Schwab. They still believe that these people are more trustworthy than Putin and Xi and India, Modi, and the communists that just took over Brazil. So there is still more confidence in the insanity of the West than the rising global South and East and BRICS. But by the end of this decade, that confidence will change. Okay, once NATO loses in Ukraine, okay, once America is not able to start a war over Taiwan, once India basically has, people gain confidence in India. What can I say? Like Modi becomes a more respected person. Like I bet you a lot of people, even on this channel that have been watching me for 5 years, you've never thought about Modi as this important figure. And over the last 2 years, he has become a very important figure. India is rising very quickly. Okay, so Brazil needs to do some changes. Brazil needs to get a capitalist in there. Okay, so hopefully Brazil will solve their problem at the next election. Once these countries get back on track, okay, Argentina, let's see what happens there. You have Middle East. Middle East is probably the most responsible government we have. I know Saudi Arabia has done some questionable stuff in the past, but I think the leadership over in Saudi Arabia and Dubai is very, very strong. And I think they're rising fairly quickly. And it looks like Iran is getting their shit together as well. Okay, Venezuela is getting their shit together as well also, from what I hear. Need to go and visit. Anyway, the point is, the US dollar will not go into hyperinflation until the BRICS are seen as more responsible and more confident, and people trust the BRIC nations more than the West. And the West is doing everything in its power to show its own incompetence. However, the incompetence in other countries so far has been greater than America. Let me give you another example here. Why is the US dollar rallying against the euro over the last, say, 6 months, right? So let's go specifically to the euro. US dollar, euro, US dollar, okay? Now, right here, July 17th. Who remembers when America blew up German pipeline? Nord Stream pipeline explosion. September 26th. Wow, it's been a year? Okay, a little longer than I expected. Let's see how we've done since that day. So, wow, has it really been a year? Jesus. October 26th, really? Okay. Let's look at July. See, there's a reason why June and July are coming up. June, something changed, right? When did Seymour Hersh's article come out? Seymour, I don't know how to spell his name. Seymour Hersh, Nord Stream. There's reason for this madness. Okay, that comes out in February. Lots of denial. So the reason why I'm looking at this is something completely turned in July. Okay. Let's go back to when that explosion took place. That was over here. Okay. The US dollar is strengthening, strengthening, strengthening. And this is where it bottoms. And now the euro starts to strengthen. Now, the US dollar did strengthen for a long time. It needed a bit of a reversal. Beautiful MRI buy as well. Okay. Now we're going down. So sometime this July, it became obvious that Europe's in trouble. And again, this is a confidence game. Okay. How can you have confidence in Germany when everyone now knows that they were complicit in allowing America blow up the pipeline? Okay. So who's going to have confidence in the euro if the United States is controlling the future of Europe and the biggest economy in Europe being Germany? Okay. Maybe this didn't work out the way I expected. Anyway, I'm expecting the euro to keep going down. There's just unreasonable incompetence in Europe, potentially even more so than the United States. So I do not believe the US dollar will go into hyperinflation anytime soon. In fact, I expect the US dollar to significantly strengthen over the rest of this decade versus the other three-legged chihuahuas in the race, meaning the European Union, the UK, Canada, Australia, New Zealand, and Japan. Okay. Meanwhile, I expect the BRIC nations to strengthen and acquire more confidence from people around the world. And then eventually the US dollar will break, but it's not going to break against the Western currencies. It would break against the global South and the Eastern currencies and against Bitcoin. So that was a really good question. Now, as far as real estate goes, where did I see this the other day? Might have been on Martin Armstrong's blog, actually, as well, because he gave some statistics. So US housing sales are significantly lower. Was it? I don't remember. And the price of homes is going down, but the interest rate is going up. So the end result is the buyer will pay approximately the same. So once again, we can go to the Financial Summit Twitter. I will have to scroll for quite a while, unfortunately, because I want to show you something. Yeah, we post a lot, but it's all trading and finance related. So you really want to follow this channel. The hell is that? Oh. Man, when did we tweet out the real estate stuff? Was it really a month ago? Surprising. There it is. Here it is. Here it is. Okay. So here's the cost to buy a home. You can see that the cost to buy a home sometimes falls, but the only time it fell a lot was in the real estate crash. I'm not expecting this big fall in real estate prices, but I am expecting more of a stagnation in real estate prices because the interest rate has gone up. I'm expecting this to level off, maybe drop a little and level off as rents rise. So while the owner equivalent rent, which is part of the CPI, might come down, inflation will actually tick up because the average person on the street will probably be paying $2,000 a month on their rent, by the end of next year, maybe even by the middle of next year. Okay, so house prices will come down. Your mortgage payment will stay the same, and your rent will rise. Okay, this is really devastating for the consumer. And all of this is happening on the back of a rising oil price, which will also make shit more expensive on the streets. So this is why, even though the CPI number could show some decline, the actual, pain to your wallet will continue with higher inflation. All right, anything else from the live chat? The BitBoy saga is interesting to say the least. A Chinese dollar, a Russian ruble, and an Indian rupee challenging the dollar sounds hilarious. It sounds hilarious to you today. It sounds hilarious to you today. Again, if Biden accidentally wanders across the border in a lost haze from Ukraine into Russia, will it still sound hilarious? If Trudeau decides to do applause for another, former Nazi war hero, is it still going to sound hilarious? Okay, because not only are the leaders of the West seem grossly irresponsible, it also shows the stupidity of the population of those countries that voted for these people. Like, how can you trust in the future of America if they all vote for Biden again, right? And if you say, well, they didn't really vote for Biden, it was a fraudulent election, then how do you trust the population of America that is too dumb to realize that there was a fraudulent election, or too, too incompetent to do anything about their own fraudulent election? Like, all signs point to the West being too grossly incompetent to lead the world into the future. Now, I'm not saying I really want China to lead the world for the next 100 years based on their surveillance state. I don't want that. But clearly, the people at the top in China are a lot more, how can I say this, smarter, with significantly higher IQs than people, in America. Now, whether they do good things with that IQ level is debatable, right? I tend to disagree with what they're doing with their intelligence. Like, we can look at the crypto space, for example. I will not deny that someone like Richard Hart is an incredibly smart guy, probably has an incredibly high IQ. But what is he doing with it? Well, he created one of the biggest Ponzi's in the space, right? I mean, look how many people are brainwashed with Hex. That doesn't happen, through a stupid individual. Christian comments: Americans are too afraid to question anything. They are not dumb, merely cowardly. Again, that is not a good trait to be the world superpower into the future. Right? If the Chinese aren't cowardly, and if the Chinese decide to just take over, fully take over Taiwan, and there's nothing America can do about it, they would project confidence for the rest of the world, because there is a lot of people living in Africa and a lot of people living in India and a lot of people living in Southeast Asia. And if China projects, and Latin America, and if China projects the kind of confidence and not being cowardly, then the world is going to follow the Chinese and not the Americans. Right. Well, the people behind BitConnect, they were certainly smart, super smart. Look what they built. It's guys like Trayvon that they managed to convince to be the face of their company and pump it for them. America is supposed to be the land of the free, and we couldn't even stand up to the lockdowns and wearing face diapers. Again, doesn't show a lot of confidence. There was that good meme. Where is it? Meme, men in. There was a couple of them. Men in 1940s versus 2020. You'll see it. Oh man, it's not gonna. Maybe it's not gonna show up images. It's hard to find. There was another one with the 1970s. It's like men in 1940s were facing certain death storming Normandy when in 2020 they're like, hiding behind a couch in a mask. Same thing. There's not what I mean with the 1970s, right? That's when like a lot of biker gangs started. I'm not saying that's good, but men in the 70s are like riding these Harleys, and men in 2020, two guys on one of those scooters wearing masks. Those are good memes. All right, let's get back to the charts. So I really wanted to, someone asked me about gold. Let's do gold first. Let's do gold. Is this dip worth buying? Let's see. Let's see if we can time this dip. So on a weekly scale, you really want to wait till the next level of support, which is 1800. On a daily scale, sorry, it's a monthly scale. On a weekly scale, there is support at 1830, and we just got a red star candle. That's not good. So your only hope is the daily scale. Now, the daily scale is going to have an MRI buy tomorrow. So let's make a note of that, right? So tomorrow, I would expect gold to finally find a low. So the last time we had an MRI buy led to a beautiful 1 to 4 candle correction off of a reversal candle. This was certainly you were able to buy in the beginning of that candle. That was a $35 upswing. Not much, but in the leveraged futures market, could have made you some money. Now, the time before that, the MRI top created a nice drop in gold, also for 35 points. The red star candle comes in, drops us a bit, and now we really fell into an MRI buy. So tomorrow, remind me tomorrow in tomorrow's video to really take a look at the futures market. I'm going to turn off alphanumerics here. And potential reversal in gold tomorrow on the daily scale. Someone is saying not all of us are pushovers in the USA. That might be true, but the problem is the lawmakers. The problem is the Senate, the Congress. The average age in Congress is about 108. And most of them are completely complicit on these ridiculous agendas. There's maybe, there's 140 House representatives plus another 50 sorry, plus another 100 senators, plus another 50 governors. So altogether, we have maybe, what, 600 people, 650 people as our lawmakers. And out of those 600, 550 of them are complete cowards that are just there to get rich. You have maybe 50 that actually care about Americans, and the other 550 are pieces of trash. That's the problem. And Americans continue to vote for these people. Ooh, okay. So the S&P 500 is doing exactly what I expected. It's just doing it a little bit faster than I expected. I expected this MRI buy to be a 1 to 4 candle correction to the upside, and then a reversal for new lows, finding the ultimate low sometime in October, and then reversing to new highs. I thought we can rally for a few more candles, but clearly today is not a good day. And it's great that Bitcoin is counter trend to the US dollar, but not so much today. So again, this is me anticipating a reversal in Bitcoin at 28,000. I mean, maybe we'll make it to a daily MRI buy, but this is a very, very bad look for the S&P. We are now breaking the prior swing low with a red star candle, and this has disaster written all over it for a second consecutive MRI buy. All right, and finally, let's talk about the US dollar. The US dollar is on a very critical weekly MRI top. I believe this is of the 1 to 4 candle correction type of MRI top before the US dollar then reverses and rises to significant new highs. You can see this top everywhere. Let's see how it's, nope, that's Euro GDP. Let's see how it's doing versus the pound. You can see that the MRI top came in a little bit, MRI buy for the pound came in a week earlier, which is, again, I anticipated. This is likely to rally starting next week. You can see it in the Japanese yen. There is a top right there. The Japanese yen is about closed at a brand new, what, 2-decade low? We're going to have to go back a lot. Yep. 3 decades. 3 decades. That was a 3-decade low for the Japanese yen. I think it's going to pull back a bit. It's going to make the mother of all cups and handles, and then you will see the Japanese yen completely fall apart. US dollar versus the Canadian dollar. Canada is just so incompetent. I wouldn't be surprised if the Canadian dollar continues to devalue. This is a nasty looking chart for the Canadian dollar. I mean, I have no plans to go to Canada, even if I get to buy everything at a 90% discount. And of course, the euro versus the dollar. This is the monthly scale, has plenty of downside. I can't believe they rallied this much. I don't understand why. Maybe the only explanation I have, my best thinking as to why the euro rallied from sub parity all the way to $1.12 versus the dollar is because it fell too far and too fast off the monthly MRI top in January of 2021. The euro devalued 22%. This was one of the biggest devaluation the euro had since their problems in 2014, 2015. That was a 22% devaluation. Similar thing happened here, where it fell 22% and then rallied significantly. So other than it fell too far too fast, you can see how the euro respects the MRI monthly scale. There was a huge top back in 2008. I guess the heyday of Europe. This is kind of like, again, the euro is a shitcoin compared to the US dollar. It will never get back to $1.60. It probably will never even get back to $1.12. I think the euro is done. I think it's going to go sub parity and eventually down to 80 cents on the dollar. Okay, so if I was in Europe, I would not hold any money in euros. I would either hold the dollar or Bitcoin or even gold. And here we are with the euro versus the dollar. I think it can rally. We can throw, maybe Fibonacci's on here, which I very rarely look at. Oh, shit. I don't even know where the hell my Fibonacci's are. And throw the Fibonacci's on here. Oh, look at that. What a surprise. Tone drew it right into the 38% Fibonacci retracement. I'm not surprised by that at all. I think the 38 retracement is the most important Fibonacci level. I can see it going down into that level. We can use the closing weekly closes as well. And it goes right into the 38 level. Okay. So you can keep an eye on that. Thailand, just like Brazil, decided to elect, well, not like Brazil, sorry, very different than Brazil. Brazil elected a historical figure in Brazil that happens to be a communist. Thai elected an American puppet as their new leader that is now severing all ties with China. I think this is absolutely devastating for the Thai economy. This is what happens when a government of your developing nation, though I wouldn't exactly say Thailand is developing, but Thailand isn't exactly, if you say which 10 countries have power and influence in the world, Thailand would not be one of the 20. When you're a country in the position of Thailand and you allow George Soros to decide who your next president is, you end up with an anti Chinese leader, and that could create lots of problems for the people in your country. You really do need to have leaders that know how to work with and that are friendly to the biggest and most important region in your hemisphere. So that means anyone that is in close to the border with Russia needs to have leaders that know how to work with and be friendly to Russia. And any country in Southeast Asia needs to have leaders that know how to work with and be friendly with China. It is that simple. Now, the same thing happens in the West. Any leader that is elected needs to know how to work with and be friendly with the United States, but don't let them select your leader for you, right? So the problem is Trudeau was handpicked by Klaus Schwab, and same thing with Biden. So you don't want your leader to be hand-selected. You want your leader to still be a populist. You want your leader to be a favorite of the people, but you want that leader that knows how to work with the countries in your area. So Thailand decided to allow, what's his name, Soros, to select your leader for you, and you can have lots of problems unless you start kicking out these American NGOs and people like George Soros out of your country. There was a couple of stocks that people wanted me to look at. One of them being GoPro. Let's go take a look. I'll just type it. GoPro was on a weekly MRI buy that was ignored. We now have extension B, extension C. So maybe the extensions B and C needed to finish. We have a red star candle that I don't like. It is back to $3. Let's look at the monthly scale. The monthly scale is on an MRI buy. So GoPro is lining up for some very, very interesting situations. I was long GoPro. We covered it a lot during the pandemic. And GoPro had a beautiful rally off of, the lows of 2020 when it was $2 all the way to $12. That is a great, great move. You can see how it popped on a monthly MRI top. The monthly MRI buy reversed it for a little while into resistance. We are now on the next MRI buy. So not much downside for GoPro being at $3. Let's look at the daily scale. Things tend to be lining up. Look at that. So it's on a monthly MRI buy. It's on a daily MRI buy. It's on an extension C on the daily. It's coming off a weekly a couple of weeks ago. Everything is pointing to a potential reversal other than price action. I would keep GoPro on my watch list. I may even consider a couple of spread trades. And it's not that GoPro is an incredible company. Here's why I would consider potentially, and I'm using my word carefully here, taking a risk-on trade with GoPro, because GoPro has intellectual property. And if GoPro falls low enough, someone is going to buy them for their IP, for their intellectual property. It's very, very possible. It is very oversold. I don't like catching falling knives. But if there was ever a falling knife I was willing to catch, it would be this complete culmination of everything MRI happening on GoPro. I don't even think they're a great company, but I'm sure someone is eyeing them right now. Hey, we'll offer you $4 a share and we'll buy them all. And we'll buy your company out. And now we get to make money on your patents. So this has potential. Let's keep an eye on it during the week. However, remember, the stock market is not ready to reverse yet. The stock market is dropping. So the stock market, it's a rising tide lifts all boats, or the other way around. So it's possible we may have to wait an extra week or so on GoPro, but it's definitely on my radar with all of these MRIs taking place. Were there any other stocks that we needed to look at? Keeping an eye on Rumble as well. Weekly MRI coming up next week on Rumble. We're about daily. Daily, we almost got it. We had a warning candle. I kind of like it. I have a very clean stop loss here. Once again, I would wait for the overall stock market to reverse. My stop loss would be somewhere in this area, but I would wait for a breakout trade in Rumble. Instacart, we are waiting for our 50% correction in Instacart. And we're only at 34%, so we're not there yet. So lots of downside still to go. Whoa, ET. What the hell is ET? That's not a good day for ET. Why is it on my list? We had an extension C last week that ended, but why is ET on my list? It looks like I would have been bullish. I don't see a top here. ET's on my list because I would have been bullish. Extension C on a weekly would have been a little concerning. It's looking like a bad day. Did they have a bad announcement? Shrinking oil supplies at Oklahoma hub may impact pipeline firms. Oh, that would be bad for the US, huh? I don't like this close. It would have hit my stop losses across the board on my daily trade. I would have seen this green candle as a nice buying opportunity at the end of last week. And had I been long this trade based on a daily time frame, my stop loss would have been absolutely hit. Worst case scenario, it would have been hit. Well, worst case scenario, my stop loss would have been avoided by a few cents. This is the worst case scenario. If I had a stop loss on this, it would have been right here, maybe down there, but very unlikely. That's a 2% drop. It's only down 29 cents, but still, unless this was a long-term options trade, I would be careful here. This looked very, very bullish on Thursday. My stop loss probably would have been hit. And Trump's company is not doing very good. All right, guys. SCHW. SCHW. This looks terrible. Had a nice MRI buy. Might have tried to jump in on that bullish trade. That's the daily. But look, the weekly is coming to an end soon. The monthly is just getting started. Let's see, what does the weekly look like? Right, the weekly is coming up on an MRI buy next week. And the monthly is just getting started on its huge downtrend. Mixed signals here. The daily would have pointed to a nice buy right now. All signs are pointing to a short trade with this red star candle new lows, but I wouldn't take the short trade because the weekly is coming up on an MRI buy next week, and there's earnings next week or in 2 weeks. So I would stay away from this trade for now. And the last thing I'll look at is Bitfarms. It is up a little bit today. Oh, beautiful MRI weekly buy. Anybody buy it? Anybody buy it last week? I didn't anticipate. I mean, I might have seen it, but I forgot. Beautiful MRI buy last week. Somebody could have picked this up at exactly $1. The low was $1 flat. Someone could have picked this up at $1. Early this morning, it was $1.22. That's a 22% rise in a matter of a week. That's not bad. But with the price of Bitcoin about to pull back potentially, I would be careful here. Yeah, I would not. I would probably be taking my exit today if I went in on the MRI buy. All right, guys. Thank you all for watching. Don't forget, subscribe to us on Twitter for Financial Summit. Where's my Twitter? And not my Twitter. Financial Summit's Twitter. Check out the Financial Summit in 30 days in Dubai and Unconfiscatable in about 2 months in Las Vegas. See you guys there. Bye, everyone. Bye, guys.